Hey, good morning. This is Mike, the developing trader, with a weekly playbook. Again, I am not an employee of SMB. I am just a trader in the trader development or tier system. And I am doing this playbook to give myself another rep to really talk through one of the best trades of the week and the month, and to share it with other folks that are learning to trade in the SMB trading style and maybe struggle with what are the best trades, what is the catalyst setup and trade, how do they come together to put together an elite level trade. So I'm looking to put together these elite trades. And, it was a tougher week for me P&L wise, but it was a great week process wise. I presented my third playbook in the Playbook Trader Development meeting program, and I built my pod, added another really good trader to the team that's helping me to learn new setups, and this trade was great. Not because it was particularly amazing for me from a P&L perspective, but from a process perspective. This is a trade or an area of trading that I am developing in. I am much more of a breakout trader, and I struggle when there's not a ton of breakouts. So to add something to this, my playbook, and something this good and understand these variables is something important to me in creating a consistently rising equity curve and taking out some of those lower spots, because you can either trade really great stuff or you can trade junk, and you should not be trading junk, and I should not be trading junk. So here's the disclaimers. Um, so this is a backside trade that happened on Friday, October 7th in NVDA. It's an overextension setup, and it's a technical catalyst. So the bigger picture is it's been a strong year overall. We all know that. And, we had this October 10th sell off, and we kind of chopped around and then ground back up to the 611 area. And people kind of discounted the tariff talk. This was kind of China trade war. And then without any resolution, people felt like this wasn't that important. And then we had kind of this parabolic move for the Qs, which is kind of interesting, which resulted in some sideways consolidation, ultimately a failure. And so perhaps this was kind of a run up into the resolution of tariffs, and then kind of a little bit of a sell the news event. And I think, over time, the government shutdown has been grinding on the markets because we're not getting economic data. The Federal Reserve meeting failing to kind of giving a view that we may not raise interest rates or lower interest rates in the December meeting also kind of took a little steam out. And then just a kind of a general feeling or general, talk about AI and the markets being overvalued. So we confirmed a downtrend. And on this day, we gapped into this 611, gap down below it, which is kind of our breakout support zone. And we're opening below the 20 day or 21 day. And so the market was looking super weak. And it looked like potentially we were going to test out the 600 area, which is the 50-day moving average. On the day of this trade, we did have a strong sell in the open. We found support at the 50-day, and we had an intraday reversal and rally into the close, which ended up being a favorable tailwind for the NVDA trade. Importantly, in the bigger picture, is all this is happening under no real catalyst. It's just like rumors and feelings. It's not like, at the top of this, there was an announcement that Trump was going to do 80% tariffs on Zimbabwe or whatever random thing, right? Which certainly Zimbabwe wouldn't send the markets down, but like something real that like there was a real reason for us to sell off. This was just, it's overvalued, and maybe it's not as great as we thought it was. So I think it's important to understand the sell is coming without that catalyst. This was a sell with a catalyst. This is kind of a fade off and extension downward with less of a catalyst. AI infrastructure, energy, and GPU plays have been hot. I think that's important. I think I might like get a tattoo on my forehead of that. I think the VIX is notable here, especially because we spiked into the 22 zone, making making the market in play. And then once we got up there on this like kind of max fear headed down to the 600 zone, the 50-day, We faded off throughout the day, again, kind of like having fear reducing, which then becomes more supportive of a long. And I think NVIDIA is a great example of this because obviously it's a market stock, one of the biggest in the market. So, this isn't a news or technical or a catalyst play. I think that it is notable that this happened in a high VIX environment where reversals, intraday, like range trades like this kind of tend to happen more. We're doing 1.5 hour vol. And I did not eliminate this piece from the slide. So that was an old part. But I think in terms of like news and catalysts, there was this like vague thing that the CEO of NVIDIA said that China might win the AI race and that they were sad because they couldn't sell chips to China. That was all, but it wasn't like China's not a huge revenue source for NVIDIA. It's pretty small, relatively speaking. And the other thing that's interesting here is that the news about the NVIDIA sell-off kept like hitting X. Like, and I think there's an important thing, like as it was going down, as it was making a bottom, NVIDIA sells off, NVIDIA crushed, NVIDIA failing. It was like these max like fear articles. And I thought that was really an interesting, and the stock wasn't continuing to go down, right? So the more kind of bad or rhetoric news is coming out, but the stock is kind of hanging in there. So that to me is bringing more eyes in here that maybe this becomes a long because everybody's seeing how much down NVIDIA is and how, it's on the ropes, it's going down. And so, throughout the morning, the news flow continued to focus on NVIDIA sell-off, but none of the news was significant and it wasn't a change in fundamentals. So as you see the technicals, there was a pretty big move in the stock without really a pretty big move in the bigger picture about this stock. So on the weekly, we had this 12-week flat base. NVIDIA has been one of the strongest stocks in the market. Took a while and it's finally started to get going. We have this weekly range kind of with support at 180 and resistance at 188. And, we had a failed breakout in early October. And then in late October, early November, we had this push up or this breakout up to an all-time high at 1220. And this was that keynote by Jensen Huang in the NVIDIA conference talking about all the great opportunities in AI, how much sales is going on with the Blackwell chip, how that was like a huge amount more than how much sales was in the previous generation of chips. And like this was a changing fundamentals, right? So we had a big run up and it kind of pushed the entire market up, helped support that kind of like parabolic move in the markets. And then, we decided kind of that this was too much and people started kind of selling out of this thing. So we had a weekly failed breakout essentially. But this was like real news and this was like it's overpriced, which is interesting, right? It's not like they came out and they said, just kidding, those like 10 times more sales in Blackwell, that's not real. Or, we can't build these things or we're under investigation. Like there was no real news that created this, which I think is interesting. It's just we went up on like fundamental changes and we sold off on kind of like opinion. So on the daily, we can really see that 180 level, which becomes critical to this trade. So on the way up and in this flat base that we talked about for 12 weeks, and 180 is acting as resistance, it's acting as resistance, it's resistance. We break out of 180 and now it's support. And then, in here, essentially what happened is we had a few day run up into the NVIDIA event. This is the actual day of the event where we broke the all-time high. And we had this really nice move. We had a gap up. The gap up sold. We made a lower high and we sold off for, 1, 2, 3 days. But really the interesting thing is NVIDIA hasn't been like green since this day. So 1, 2, 3, 4, 5, 6, 7, 8, 9 days where we closed lower than our open. And what's notable too, in a check in favor of this trade is that we had extension. So, we're kind of ranging. We put in a sell day. Where we try to push up and fail. And now we kind of have more of a capitulatory like range expansion day. and we also have an increase in volume. So this is the up move, this is the consolidation, this is the capitulatory day, and it wasn't massive capitulation, but this is a market stock with 4 trillion in market cap, so it's not going to trade like a low float. And then we basically break this 188, and this is a failed breakout. So what happens with failed breakouts? They go back to the bottom of the range, and they do one or two things, right? They either fail through the bottom, which we have definitely leaked through the bottom of this 188, but not really since we got up above it, right? We kind of like this range action that was below 188. It's kind of a separate range. Like we have this range, we get above here, and 180 has been like kind of holding. And you can see a situation when with the sell-off that large institution, large funds see an opportunity that this stock is not broken, that this is like a big opportunity to own a stock at a 15% discount. In 7 sessions, we've dropped 15%. And this is, the biggest AI play with real earnings. Like, we have these parabolic moves in these AI plays, but they're not really making money. Like, they're speculative things. NVIDIA is not a speculative thing. This is a real company making, billions of dollars. So this trade may not work in those speculative things, right? Support may not hold, especially as the market sells. But in this, I think, that's a key piece that made this work. So, on the 60-minute, we can see this failed, kind of breakout. We can see this lower high. We can also see this 191 support zone, which we consolidated under the day of this trade and then flushed down. So you can see the sell. We kind of like hold at highs, make a lower high, and we sell pretty hard. So leg one, we consolidate. We have a move down. We have another leg. And we have a third leg, which is a shorter consolidation and a steeper move, right? I think this is steeper than this. And we also had a steep move going in here, right? So like all of a sudden we're going from this kind of like, maybe NVIDIA will sell. Yeah, we should sell it, to like, okay, now we're going to sell a lot really fast. And so, one of these things, and again, this is not like a major, like super duper capitulation, but it's definitely showing signs of steepening. This is a really steep sell the day prior, a shorter consolidation. Look, we consolidated here. We held for like two after hours and a full session. Now we have like a full session and an after hours, and we're selling again. So, we bottom on the 60, doji candle, and we keep buying up. And I think it's interesting to note and that we found this 191 again, which was support here. So on the 15, the second highest volume of the day was on the turn. We made a new 15-minute high, and essentially we bought up and reclaimed this whole down move from after hours. A lot of people have been asking me why this short wasn't as good. And the reason this short wasn't as good is because we had done all this. So like the chance of us like continuing here is not as clean as like just popping up. And so the long's definitely a higher EV trade than the short. And that would be different if NVIDIA had some changing fundamentals, right? If there was something like they were under investigation or something terrible happened to the company, of course it's going to keep going down. But like there's nothing wrong with the company, at least that we know. And that could change, but it hasn't. So it found this 180 level, consolidated for like 45 minutes, and then it pushed up. So on the 5-minute intraday, I think that, this is a trade that easily could have been taken on the 5-minute. Like you have all this selling, consistent selling, holding the 5 moving average, and we have a 5-minute turn. And this 5-minute turn where we finally pop up and hold is definitely a place to get long. It's not my place to get long, but it is a place. And you can see, we put in a high volume doji on the turn, signifying like a change. And we have this wick. We went down to 179.81, but then we reclaimed 180 and we held for 50 minutes. So almost an hour we're holding we were basically 181 by 180. And so my trade strategy was essentially look for a hold above 181 and the buyer stepping up on the tape to get long and hold basically for a fill of this whole down move during intraday. And so it did break 181 on increased volume. Like, this is definitely a different looking candle. So there's a lot of good stuff in here. Um, so on the intraday, again, highest volume was about 6 candles before the turn. So, buying the highest volume bar, it's not going to work, right? And there's a world where this kind of happens and this rolls and we do another leg. That could have absolutely happened, which is why I didn't buy this, because this looked like this was going to roll and then it reclaimed. But it also could have done this wedgie thing and eventually broke down if the market broke down. So, to me, like, this trade really validated on this backside where you have a higher high, a higher low. This should have broken here. This is your higher low. And then we have this consolidation that breaks the higher high, and we can put our stop either below the higher low or like in this zone, right? And we curl up and we leave these prices behind, right? The institutions say, oh shoot, this is a real steal. And, the buying programs go on and we just zip up and we close at high day. We close at, like, after hours, we hit 190. So that's an NVDA, that's like a 10-point move, which is pretty darn good. So, I'm still working on this overextension strategy. But, in this one, what made NVIDIA work is 5+ red days into a prior breakout zone. And it was 3 ATRs extended from the highs. We had support with the 20-day moving average and a prior, like, technical support area. And we had a morning flush, we had a reversal wick, and we had a VWAP reclaim. We did have a capitulation volume on the flush. This is not like a massive, like, low float style capitulation or Tesla style, but in its own NVIDIA way, it capitulated and slowly held. And the market context helped this trade go because the indexes stabilized. They started to buy up. And, the trade is the backside. And, the backside gets taught in SMB as like as a scalp, as a price action scalp. But there's another, like, market structure reason to trade this. And it's because you have a bigger picture idea. And I like the bigger picture idea better than actually trading this as scalp. Because for me, trading this as scalp gets me involved in too many trades and is gateway to over trading. And, this consolidation, like, so the backside for me works great in, like, gap into support resistance. It works great on day one changing fundamentals where we sell off or we go against the fundamental, finally, like, realize, hey, maybe this is not the right price, pull a backside, and, like, we're targeting high a day. So, like, in all of these, I'm looking for the backsides that we're really looking for high a day, not the ones looking for VWAP, because A, it gets me into worse trades, and B, sometimes the risk to reward isn't that great. I mean, look at this backside. This is a huge wide range, and VWAP ain't that far away. So this is like a 1-to-1. So I don't really love that as a VWAP trade. But, it's a great place to learn it, and I think it definitely works. It's just not part of the system that I'm developing. I'm looking for this backside as more of a trade to hold. So my executions, this was way too busy. Like, I did way too much. And I think this is one of the things I learned from a previous playbook that Bella did, is that being less active in the trade generally benefits you. So what I did really well is I bought 5% of my stop in premium, of the 185 0 DTE calls, which were like a dime. And in this consolidation, because I said, this could fail, it could roll over, but, like, we had this volume capitulation, the market's turning, we're finding support above 180, this is feeling like go up, and, so this is like an idea trade. The bigger, the price was just so attractive, right? So I bought those as kind of a FOMO fixer. Like, if I miss this breakout and I call it wrong and I just hold those is going to work great. And then I bought 15% of my stop when we curled up and broke 180, which is my plan. Break 181 and see the bid step up. So that's what I did. I bought 15% of my stop against here, but really it was like against here because it should not come down. And then this is where I don't like the stacking idea for me. Because again, I'm adding too high and I'm not liking the adding too high. I need to like get rid of that. But I bought another 15% on the Fashion Me late, which just isn't the trade for me. It chops around too much. Like I like this momentum. This is like, I know I'm right and it's not coming back. And if it comes back, I'm wrong. Here, it's like, I am probably right, but I need to give it room because it spent like 30 minutes of VWAP. So unfortunately, that 30 minutes of VWAP got me shaken out of my stock, but not my options. And when it reclaimed and it looked on the tape like it was going to like shake this off, I replaced the stock with 182.50 calls. We were just below 182.50. So it's a good stock replacement. And they weren't super expensive because it was 0 DTE. And I actually probably had a little more size at that point than the 30% of my stop. And that's great. So that all worked out, but it would have been much cleaner just by 30% of my stop right here, or even 15% and ignore the ad, the VWAP continuation, or just buy a lot more calls. We'll talk about it. And then I sold 50% of all my 185s into the strike, which, you know, would have been good. But then I was all out of my calls on the 185s and the 182.50s on this backside here into the strike. And I really should have left more to see what could happen because these options just, I mean, I took a small percentage of the value that I could have by just holding a small percentage of my options into the close. For example, those 10-cent calls went to $3.20. The 182.50s, I mean, gosh knows what they were, like probably like $7. So live and learn. And but you know, this is a trade I'm learning, so it's okay that I was a little more conservative about my sizing, because I don't have the confidence in this trade because I haven't done it as much. But this was a really good version, at least a B plus, maybe an A. I think one of my buddies rated this an A minus, and that's probably right. It's probably an A minus. So this is the ideal, is to buy 185 calls with 5% of a stop. I like that move. And then I would add 15% of a stop in 185 calls. And oh, I see. My arrow's in the wrong spot. I would add it right here. And then I'd buy 20% of a stock. So I'd be up to 40% of my stop here. This is the spot to put on the 40% of my stop. For me, it's not here. It just isn't. This is too choppy for me. And then I think it's okay to sell 50% of my 185s after it backsides into the strike, which actually I think is in here. This kind of moved around. And then sell 30% of my stock at the close below the EMA at 21. We haven't touched it since VWAP. And I think we're up into highs. I think this is a good place to start ringing the register. And then I think as we get into the 187 price and it starts to get tougher, I think the backside here is fine to get out of all the stock. And then I think you hold the options into the close. So, you know, that's a better way. And just to give you an example, this is a 3,000% gain on these 185 0 TTEs. They were 10 cents in the consolidation. At the breakout, they were 25%, so a 1,500% return. They, you know, didn't do a lot in the VWAP consolidation. When they first moved into the strike, they got up to about $1. But really, the exponential value happened in holding them into the close, which that's what needs to happen. Like, and this is where 50% can come off into here. And then you just have to let the other 50% run. If it goes to 0, you still made money. But if it goes to $3, you made a lot of money. I mean, if you held, you know, $1,000 into this, you know, just $1,000 worth of this, you know, you're making $30,000. You know, $10,000 is $300,000. Like, this is the trade where you can make your month, year, or day if you know what you're doing with these, if you're buying them within your risk parameters, and you're holding them for the real exponential explosion happens, which absolutely was the way to go with this. So, you know, I'm learning this trade. I think this is great, but these are the trades where you can make your year. This is another potential, you know, month maker. We'll not call it a year maker, but this is a month maker, definitely a week maker. You know, for me, it was a day maker, but like it's a developing trade, so I'll take it. Let's look at the tape super quick. I recorded the turn down here, but I'm not going to do that. I'm going to go just to the one spot because I think this is where I would put on the risk, and that's where. So here's the consolidation. I mean, this is so clean. So let's just go to where it goes and just look at it. Okay. So this is a 2 minute. So let's see if it goes here. It's coming up into this 180, but really we're looking for the bid to hold 181 and step up. So there's 86 cents, 87. Size on the offer. More size on the offer. It's going to go now. Some size. We're just burning through that size on the offer. Those sellers. And yeah, 15, 12. Okay, there you go. I'm in. Stop against here. But honestly, it could be here because this has to go now. If it's not, it's a fake break. It stuffs and it goes back through the bottom range and makes new low. So like, honestly, I feel like you could be here with your stop. So I sized it to here, but I quickly moved my stop to here, which makes you be able to get much bigger. And that's it. It worked. Man, I don't know, need to watch it. Like, that's the moment. And you saw the size in the offer get eaten up, and we just ripped up. So I'm not going to spend a bunch of time on it. Like I said, VWAP was tricky. It looked good coming in for the fashion week late, but I just don't like this. I struggle with this, especially like this right here. Like this could easily be a VWAP continuation, and we roll and we like take out lows. And if the market rolls, that's what's going to happen. So I feel like you can get a lot tighter risk in here than you can in here, and you got to put up with more, which, clearly doesn't work as well for me, but it's okay. So back to NVIDIA. Okay. So I am building an overextension screener. I currently use Justin's 5 ATR or 4 ATR from a 4 or 5 day high, but I need to build out a screener because I would like to trade more of these. And, I'm lucky that this one came up because we were talking to other traders. We were talking to our pod. I was talking to my network, and people were like, hey, NVIDIA's setting up. But like, I need to build the ability to find that without like my friends telling me. But, part of developing as a trader is having your network and having people tell you, like more eyes is better. And, so being part of a team and having people that are looking to help you understand where the best opportunities may come from is great because it gives you like a better opportunity set. And then you have to have a playbook set that allows you to capitalize on those. And then you have an execution skill set that allows you to, really hammer them. And so like networking on this one was like an A, like playbook was like a B because I'm learning it. And execution was probably like a C plus, but like, that's where it is. And, I'll be better tomorrow than I am today. And this is trading. So I'd give myself a C for risk management. I didn't size up enough, but the trade is developing. I am much more comfortable. My office is breakouts and I need to add a mean reversion office. This is set up. I can learn and build better. I love this trade. And my risk management was too conservative. I took too much off. I mean, I could have made a lot more without taking more risk. And so that's not acceptable, even in a developing trade. Like, just freaking hold it, right? You already did the hard work. You already put on the risk. Like, now you're getting paid. And, it's like going to work and not showing up for your paycheck. Like, you need to stay for your paycheck. So one thing to improve, hold for a clear, predefined reason to sell. The options on this particular case, 50% at strike, 50% close day. Also, the other thing to change is to buy my stock at the backside. Do not mess with the fashionably late. What I did well, good stock selection, technical setup, great teamwork by my pod, and working to learn and understand developing setup. I managed risk. I paid myself as the market moved. I recognize the risk to reward high EV in buying Z or DT calls in the consolidation. I patiently waited for the A entry. I think that this is one of the things that my pod mate was saying to me, who trades these a lot. And what I learned out of this trade is like, you have to sit there and wait to see it. You can't be buying the falling knife. You can't be buying in the downtrend. You have to wait for the trend to end and start to reverse. And that backside was the end of the trend. I expressed this trade idea with options in stock. And I did hold the core of options and captured a bigger part of the move. It wasn't a bad trade. Made a good amount of money. I made, a daily stop, but, it could have done a lot better. I could have made multiples. This trade requires patience, the patience to wait for a turn, the patience to hold the entire move. And I need to be way less active in my position, put on risk, and just let it work. Let the risk work. I am doing the work by trading and doing stuff and moving things and selling things and buying things and looking at things. And really all I need to do is just like put on the trade and let it work. So what I can do better is to be less active in the trade. I can put on all my risk at the backside and I can leave some options for the close, stop taking unrealized profit, let it run, and gain more reps in the trade. So super fun, awesome trade. I love that this is a trade I can build to build out my trading business. And this is at least a week maker, if not a month maker. So it's something to study. And so that's why I'm putting it out there, and we will study and learn together. And as always, if you have questions, feel free to hit me up. If you're in the SMB universe in the Discord, I'm happy to chat and meet other traders. And if you have feedback or thought that I didn't get this right or missed something or could do something better or anything like that, I would love to hear it too. Because I am like everybody else, just trying to get better every day and share my progress. So have a good one. Enjoy your weekend.